Welcome to Talk Tickers. Today we're going to take a deep dive into MicroStrategy's Q3 2024 earnings call. And, this one is a bit of a doozy.
It's definitely a unique one. So we have MicroStrategy, a company that built its name in business intelligence software.
Right.
Now they're calling themselves, get this, the world's first Bitcoin treasury company. BTC, they say.
Catchy.
Although they did make sure to clarify, not that BTC.
Yeah, okay, I get it. Not Bitcoin, but a company with a treasury made of Bitcoin.
Yeah, precisely. I mean, it's almost like they're trying to become like a Bitcoin central bank,
Yeah, that's a good way to put it. They're not just holding Bitcoin. They're actively managing it like a reserve currency.
Right, like they're issuing debt and equity to buy even more Bitcoin. And even, get this, setting target yields for their Bitcoin holdings.
So is software like taking a back seat now?
Well, their software business is still going for sure. I mean, their cloud revenue grew by a pretty impressive 93% this quarter.
Okay, that is impressive.
But let's be real. All eyes are on their, Bitcoin strategy.
Okay, so let's get into the numbers. They bought another 25,889 Bitcoins in Q3.
They did, bringing their total to a whopping 252,220 Bitcoins.
Wow.
And put that into perspective, that's, as of yesterday, roughly $18 billion.
$18 billion. Wow. And they're not stopping there. They said they want to raise, you get this, $42 billion over the next 3 years, split between equity and debt, and mainly to buy, wait for it, even more Bitcoin.
$42 billion. That's like building a Bitcoin fortress.
It really is. They're all in.
Yeah.
What else was in the call?
Oh, they also made a point of saying they paid off a $500 million senior secured note. Basically what that means is they own all their Bitcoin free and clear and no debt attached.
Okay. So no strings attached. They can do whatever they want with it.
Exactly. This plus their ambitious plans to raise even more capital really shows they're committed to this idea of Bitcoin as their main core treasury asset.
This is, some might even say, reckless strategy, right?
It's certainly unconventional. It's like they're betting the whole company on the future of Bitcoin.
True.
Now, whether you think that's brilliant or crazy really depends on how you feel about Bitcoin.
Yeah, fair enough. But they're buying a lot of Bitcoin, so what are they planning to do with it all?
That's where this BTC yield thing comes in. It's their way to measure how effectively they're using their money to buy Bitcoin, especially since they're issuing new shares to pay for it.
BTC yield. Sounds complicated.
It is a bit technical, but think of it this way. It's like seeing how much your Bitcoin garden grows compared to how many seeds you plant.
Okay.
So a higher yield means your Bitcoin is growing faster than the rate at which you're issuing new shares, which, could dilute the value for current shareholders.
Okay, I'm starting to get it. They're trying to show that even though they're giving out more stock to buy Bitcoin, their Bitcoin is growing even faster.
Exactly. They want to reassure investors that this strategy is actually making money, even with the potential for dilution from those new shares.
So it's a way to show that their Bitcoin bet is paying off for investors.
Precisely. And it plays into their bigger goal of offering a bunch of different investment options all tied to their Bitcoin.
Like what? What kind of options?
So it's not just equity, for people who want direct exposure to Bitcoin. They're also looking into fixed income stuff like bonds.
Okay.
That would offer Bitcoin exposure, but with, potentially less volatility. It's like creating a Bitcoin mutual fund almost, with different levels of risk and reward.
I see. So they're trying to build this whole world around their Bitcoin, appealing to both the crypto diehards and the more traditional investors who just want to dip their toes in.
Exactly. And they say this approach is working. In fact, they even said in the earnings call that they've done better than all 500 companies in the S&P 500 over the last 4 years.
Oh, well, that's a bold statement.
Yeah.
And they're saying this success is because of Bitcoin.
They are. They say that being willing to ride the waves of Bitcoin's volatility has actually made them more attractive to investors. They see volatility as an opportunity, not a bad thing.
So they're turning the whole risk-averse investing thing on its head.
Exactly. They even compared themselves to an oil refining company for Bitcoin, taking raw Bitcoin and turning it into all these different financial products.
Okay, yeah, I get that. So they're buying tons of Bitcoin, making financial products with it and saying it's a winning strategy. But for the average person, just trying to understand all this Bitcoin stuff, what does it all mean?
Well, that's the million-dollar question, isn't it? And honestly, there's no easy answer. It's high risk, high reward.
Not for the faint of heart.
Definitely not. I mean, how MicroStrategy does is completely tied to the price of Bitcoin, which, as we know, can swing wildly. If Bitcoin crashes, their stock could tank.
Right.
But if Bitcoin takes off,
Well, then they could be sitting pretty.
exactly, it's a big bet on the future of Bitcoin. So before you even think about investing in MicroStrategy, you have to decide, do you believe in Bitcoin? Do you think it has what it takes to become a real store of value, like digital gold? Or do you think it's all just a bubble about to burst?
That's a big decision.
Yeah.
It's not just about diversifying your portfolio. It's about deciding if you believe in a future where Bitcoin is a major player in finance.
Absolutely. And whether or not you agree with what they're doing, you got to respect their commitment and how carefully they're doing it. They're not just throwing money at Bitcoin, they've got a whole strategy built around it.
So we've established that MicroStrategy is going all in on Bitcoin. But what about the bigger picture? Could this start a trend with other companies adding Bitcoin to their balance sheets?
Yeah, that's the question everyone's asking. What if MicroStrategy makes this work? What if they show that a company can actually run with Bitcoin as its main treasury asset? It could totally change the game. Companies might start holding Bitcoin right alongside dollars and bonds. It would be a huge shift.
It would be. So MicroStrategy isn't just betting on Bitcoin. They're betting on a future where Bitcoin is a major part of how companies manage their money. That's a lot to take in.
It is. But before we get ahead of ourselves, let's go back to MicroStrategy's Q3 performance. What were some of the key numbers that stood out to you?
Well, besides the Bitcoin buying spree, their focus on managing debt really stood out. Remember that $500 million senior secured note they paid off?
Yeah.
That move really lowered their interest expenses and freed up more cash for, well, you guessed it, buying more Bitcoin.
Smart move. They're thinking long term.
They are. And they're doing it with, surprisingly, a good deal of financial discipline. It's not just random Bitcoin buying. They're strategically managing debt, aiming for those BTC yield targets, and carefully planning their stock offerings. It's more nuanced than people might think. They're managing their debt, but they're also planning to raise a ton of capital.
Yeah.
How are they approaching that?
So their plan, they call it the 21-21 plan. It's incredibly ambitious. $42 billion over the next 3 years, split evenly between equity and debt.
$42 billion. That's a lot of money. Aren't they worried about what it could do to their stock price?
They addressed that head on in the call. They said, look, we're a growth company and Bitcoin is our main growth engine. Their argument is that the value they create through their Bitcoin operations makes their company worth more than just its assets. Basically, they're saying their Bitcoin is worth more than the sum of its parts because of how they manage it and its potential to grow.
So they're saying they're not just a passive Bitcoin holder. They're an active manager of a Bitcoin portfolio.
Right. And they believe that deserves a premium valuation.
It's a bold claim, and to be fair, their stock has done well since they adopted this Bitcoin strategy. But is it a good investment? I know you can't give financial advice, right, but what are your thoughts?
Tough to say. It really boils down to how much risk you're comfortable with and what you think about Bitcoin's future. If you think Bitcoin is going to significantly increase in value, MicroStrategy offers a potentially powerful way to benefit from that.
But if Bitcoin crashes,
then MicroStrategy could take a big hit. It's high risk, high reward, and it requires careful thought. However, they did say they're committed to prioritizing the interests of their common stockholders over the long term. Yeah, and they laid out some principles that guide their Bitcoin strategy, focusing on transparency, responsible growth, and maintaining a healthy balance sheet.
Trying to reassure investors they're not gambling on Bitcoin, but building a sustainable business around it.
Whether they'll succeed, only time will tell, but their Q3 performance certainly gives us something to think about. It'll be interesting to see how they handle the next few years as they try to raise all that capital and build out their Bitcoin financial ecosystem.
Definitely a story we'll be following. We'll keep our listeners updated as things develop.
Okay, so we know MicroStrategy is all about Bitcoin these days, but they're not just like stuffing it under a digital mattress. They want to make their huge pile of Bitcoin into like a money-making machine.
Right. They talk more about that BTC yield idea in the earnings call. It's their way of tracking how efficiently they're buying Bitcoin, especially since they're issuing more stock to pay for it.
It's like a check to see if their Bitcoin strategy is actually making money for the people who own their stock. It's not just about how much Bitcoin they have, but how well they're growing their Bitcoin holdings for each share.
So a higher BTC yield means they're adding Bitcoin faster than they're watering down the value of existing shares with new stock.
Exactly. They want to prove that even though they're putting out more stock to buy Bitcoin, their Bitcoin holdings are increasing even quicker, which helps investors in the end.
It's like they're saying they're not just moving money around, they're actually making the pie bigger for everyone.
Precisely. And they said they've consistently had a positive BTC yield over the past few years, even while buying tons of Bitcoin.
So their strategy, at least according to their own numbers, is working.
That's what they're saying. They've actually set an even higher target for BTC yield going forward, aiming for something like 6% to 10% per year over the next 3 years.
6% to 10%. That's a pretty big goal, especially considering how much Bitcoin they already have.
It is. It means they think they can keep finding clever ways to buy Bitcoin even as it gets more popular and the price maybe goes up.
It shows they really think this Bitcoin train is going to keep rolling.
They mentioned using a mix of things like borrowing money, issuing stock, and using cash from their software business to fund these Bitcoin purchases.
So they're not putting all their eggs in one basket when it comes to buying Bitcoin.
Exactly. And they said they're committed to what they call intelligent leverage, which is basically using debt in a smart way to increase their Bitcoin exposure without taking on too much risk.
It's a balancing act, and it seems like they're doing pretty well so far.
Yeah, for sure. But keep in mind, their ability to maintain this BTC yield depends on a few things.
Like what?
Well, the price of Bitcoin obviously is a big one. Then there's their ability to raise money from investors through debt and equity. And how well their software business does also affects how much financial flexibility they have.
So a lot of moving pieces that could affect whether they hit that big BTC yield target.
Definitely. Remember, it's just a target, not a guarantee.
But even if they don't hit it perfectly, the fact they're focused on this metric at all shows they're thinking strategically, which isn't always the case in the crypto world.
Yeah, I agree. It's like they're bringing a more traditional finance mindset to their Bitcoin holdings, which is pretty interesting.
They even compare themselves to the oil industry, calling themselves an oil refining company for Bitcoin.
Yeah, and I think that's a good comparison. They're not just holding on to Bitcoin. They're trying to transform it, turn it into different financial products with different risks and potential returns.
So they're catering to different types of investors. Some people want direct exposure to Bitcoin, while others want a more conservative option with less volatility.
Right. They're creating a menu of Bitcoin-linked investments, appealing to a broader range of investors, and basically expanding the Bitcoin ecosystem.
They said that their convertible bonds, for example, have historically done better than Bitcoin itself, giving some protection against losses while still letting investors benefit from potential gains.
That's been a big part of their strategy. Debt instruments like convertible bonds allow them to leverage their position and potentially increase returns for their equity holders.
So there are lots of ways to get involved with Bitcoin, and MicroStrategy is exploring all of them.
They're really trying to lead the charge in how Bitcoin evolves as a financial asset. They're pushing the limits.
Speaking of pushing limits, MicroStrategy's CEO Michael Saylor had some pretty strong opinions about the state of the Bitcoin market today.
Yeah, he's always been a big supporter of Bitcoin, and in this earnings call, he was even more convinced that we're still in the early days of Bitcoin adoption.
So he sees a positive future for Bitcoin, despite the ups and downs and the unclear regulations around it.
He does. He highlighted a few things that are going well, like the launch of Bitcoin ETFs and growing interest from institutions.
He was really excited about those Bitcoin ETFs, calling them the most successful ETFs ever launched.
It's true that a lot of money has flowed into Bitcoin ETFs this year, showing that more and more people want regulated and accessible ways to invest in Bitcoin.
Saylor also mentioned that more major political parties are accepting Bitcoin, suggesting it's becoming more mainstream.
Yeah, he thinks Bitcoin is on its way to becoming a normal part of the financial world.
He even said that Bitcoin is the dominant digital monetary network. He argued that it's something everyone needs and no one can stop.
He's basically saying Bitcoin is inevitable, that it's not just some risky asset, but a groundbreaking technology that's here to stay.
He even compared Bitcoin to companies like Facebook and Google, saying Bitcoin is the Facebook of money, or the Google of money.
He sees a connection between Bitcoin's potential to change the financial system and how those companies disrupted their industries.
It's a big comparison, but it shows the transformative power that many people see in Bitcoin.
Of course, we can't talk about Bitcoin without talking about volatility. Saylor actually argued that MicroStrategy's success is partly because they're not afraid of Bitcoin's volatility.
So they don't mind the ups and downs, they see them as opportunities.
Right. They've used their knowledge of Bitcoin's volatility to their advantage, making money through things like selling covered calls and issuing those convertible bonds we talked about.
They've turned volatility, which is usually seen as a bad thing, into a part of their strategy.
And they think their approach could be a model for other companies thinking about adding Bitcoin to their treasury strategies.
They're saying companies should see Bitcoin's volatility as a chance to make money, not a danger.
It's definitely a different way of thinking, but it's been working for MicroStrategy, at least so far.
It challenges traditional corporate finance wisdom, and they're doing it with a lot of confidence.
It's an interesting experiment and one that could have a big impact on the future of finance.
Okay, we've covered a lot. We've talked about MicroStrategy's Bitcoin strategy, their BTC yield target, and their CEO's bullish outlook on Bitcoin. But let's bring it back down to earth for a minute and talk about their core business, their software business. How did that perform in Q3?
Well, their software business is still changing, shifting from a traditional on-premise model to a cloud-based subscription model.
And is that shift affecting their revenue in the short term?
It is. They reported a 10% year-over-year decrease in software revenue, which is not what investors want to hear.
No, definitely not. But they said this decrease is mostly because of the accounting involved in switching to a subscription model.
Right. The good news is their cloud subscription revenue is growing fast, up 93% year-over-year.
It's like two different businesses. The old software business is shrinking while the cloud business is booming.
That's a good way to put it. And they're actively managing this change, putting money into their cloud platform and encouraging existing customers to switch over.
They're also trying to cut costs in their software business. They mentioned plans to reduce annual staffing costs by about 13% next year.
Right. They're focused on being more efficient as they move to the cloud. It's pretty clear that their software business isn't the main event anymore. It's taking a back seat to their Bitcoin strategy.
It's like their software business is now their stable side gig while they go after their true passion, Bitcoin.
That's an interesting way to think about it. But don't forget, their software business still makes hundreds of millions of dollars every year.
True, it's not nothing.
And it provides some diversification. It reminds us that MicroStrategy isn't just about Bitcoin. They're a company with multiple parts and a history of innovation.
And that innovative spirit is now showing up in the world of Bitcoin as they explore new ways to use this emerging asset to benefit their shareholders.
They're pushing the boundaries of corporate finance, and it's fascinating to watch. Their journey so far has been full of surprises, and I don't think that's going to change anytime soon.
It's definitely a company to keep an eye on. But before we talk about what their strategy might mean for the wider market, let's think about the potential risks and rewards of their approach. What could go right and what could go wrong? Okay, so we've looked closely at MicroStrategy's Bitcoin-focused strategy and how they did this quarter. But the big question is this a smart move or just a big gamble? Could other companies follow their lead, or could it all blow up in their face?
Oh, it's the big question, right? I mean, you can't ignore the fact that they've done really well since they went all in on Bitcoin. Their stock price is way up, they've got new investors, and their Bitcoin stash has grown like crazy.
But as we said, it's a risky move tied to the unpredictable world of Bitcoin.
Definitely. For most companies, putting Bitcoin on their balance sheet would be a huge leap of faith. You'd have to change how you think about risk, be okay with volatility, and really believe in Bitcoin's long-term potential.
And MicroStrategy seems to have that belief big time. They're not just dipping their toes in, they're diving headfirst into the Bitcoin pool.
They're true believers. They're backing up their words with their money. Their bet is that Bitcoin will eventually become a widely accepted store of value, like digital gold.
And if they're right, the payoff could be huge.
Absolutely. If Bitcoin keeps going up in value, their Bitcoin holdings could become a major asset.
But on the other hand, Bitcoin could lose value, and that could wipe out a big chunk of their investment.
That's the risk with anything speculative. There's no sure thing with Bitcoin. It's a high-stakes game.
So what does this mean for the average investor? Should we all be buying Bitcoin like MicroStrategy?
I can't give financial advice. The decision to invest in Bitcoin or anything else depends on your personal risk tolerance, your goals, and your financial situation.
But MicroStrategy's story definitely makes us think about the future of finance.
For sure. It makes us consider Bitcoin's place in a diversified portfolio, its potential to shake things up, and how companies are interacting with this new digital asset.
MicroStrategy's bet on Bitcoin is a fascinating case study. It's an experiment that could change how we think about money, investing, and the future of finance.
Whether they succeed or fail is still unknown, but their journey is worth watching. They're challenging the norms, pushing the boundaries, and making us question what we thought we knew about the financial world.
And that's what makes this deep dive so interesting. It's not just about numbers and earnings reports. It's about exploring new ideas, seeing innovation happen, and thinking of the possibility of disruption.
It reminds us that finance is always changing, and sometimes the most unexpected ideas lead to the most interesting results.
Thanks for joining us on Talk Tickers. We always encourage you to do your own research, carefully consider the risks and rewards, and make informed decisions that fit your goals. Until next time.